Welcome to Stock Market 123. I'm Sailesh Shetty, professional stock trader and coach. So after this, we see after it has completed the downtrend again when it was hitting above this 11 EMA in the weekly chart, in the monthly chart or the weekly chart, you could actually again enter because it is coming out of the downtrend, right? So this is again called as a cheat area because it's still not reached the top, right? So you could still enter here, and then right from there you see it's continuously been going up. There are of course we have the market moves in cycles, right? So we would see there are always ups and downs. So this is what it is, right? So irrespective of whether you are a short-term investor or a long-term investor, you could still ride all the way from here to here, right? I am mostly trading in and out because I have the time on my side and I don't want to ride the stock, and see the stock tanking in and take losses. So in the stock market, the secret to making big money is taking small losses. The smaller your losses you're willingly take, then you don't have to cut your hand. So if you there are some mentors who say that if you cut your finger, you don't have to cut your hand. So before your stock is when it's going down, if you decide that I'm going to book my loss here, then and I admit that you're wrong, you took the wrong entry, or your trailing stop loss gets hit, right, and you exit early, then you would save your capital and stay on the sidelines. So for example, if I am trading, right, what I would do is I would typically enter when it is in the day in the I typically look at the daily chart. Okay, so when I would time my entry something like this, when it is above the 50-day moving average, right, it has gone up. So the first entry if I'm taking initial position, if it is above the 50-day moving average, that's when I would do. So the 50-day moving average is the purple line you see here, 50. So above the purple line when it has moved, I would take my entry somewhere here and then ride it. And the next time I see that it is coming below the blue line or the red line, I would exit. I would have still made something like, from between there to here, I would have made something like, here I would have made at least 5%, 5 or 4%. Okay. But in some cases, because this is still in the zone. But if I was, if I had entered something like here, right? If I take, let's say I enter somewhere here, and I would have been able to ride till here, and then let's say it's coming down, I exit here, I would have made 34%. So this is EMA, the blue one, this is 21, this is 34, and this is 50. These are different moving average lines. Moving average lines are basically the average of the prices, the closing prices for the last 14 days, whatever that average identifies. If it's a 14 EMA, it's the average of the closing prices of the last 14 days. 21, 34, 50. So that those averages are basically the you can say the indicator lines or the sub baselines against which we track whether our entries and exits. So if you're a long-term investor, right, it would make sense for you to follow the 50 EMA. Okay, so if you look at the daily chart, okay, so because you don't want to get in and out of the stock, so again and again. For me, I being a swing trader or a short-term trader, I prefer not to waste my time when the stock is coming down. I would rather book my profit here and go and buy another stock. Whereas you don't have the time to look at the stock, right, every day. So you would rather hold on to it unless it falls below this, you won't. So you would ride all the way from here, right, here to here until it fell down here, right? So the 50-day, right, with 50-day divide 50, you divide by 5, right? Because 1 week is 5 working days, right? So divide by 5, this becomes 10 EMA, right? 10, right? So 10 weeks. So your 50 day in the daily chart is basically 10 weeks, right? So here you can look at the 11 EMA. So because it's around about the same average, right? So here you can look at the 11 EMA if you're just following the weekly chart. If you don't want to look at the daily chart, because the daily chart goes up and down all the, if you find that there is a lot of noise that we call as the market noise, right? Because it's always moving up and down. So if you want a more smoothened process, you can also look at the weekly chart. This is what the long-term investors do, right? They look at the weekly and monthly charts to do their entry and exit. Okay, so you can also enter on the 11 EMA here, somewhere here, when it is above the 11 EMA, you can enter and then ride it all the way until the week, the close goes below that 11 EMA in the weekly chart. So here you see the closing has come below that, so you would exit here typically, right? It is possible like that the following week it may come up. So, but then in that case you can re-enter. If you have your conviction on the stock, you can re-enter. It's always okay. But what mistakes people do is they keep hoping that the stock will come back, but it may not, right? So if you see there was a big red candle here, so it may have continued down. So the best thing is to book your loss, book your profit, because you're in profit here. So you book your profit here and then exit. And if the stock bounces back and above this average, then you buy again. We will look at this together with the RSI. So now you see here when the stock was moving above the average, right? So you also see that the RSI also here in the weekly chart, it had gone above 60 at the same time. So that is how, so this is a double confirmation that you're on the right track. Okay, this above 50 is kind of a bullish thing. If you're looking at the daily, you would have get a even faster entry, right? So that's why I prefer the daily one. Here, if you see here, you see this. So, right. So here the stock is going away above this 11 EMA and 11 and 21 EMA, right? So all the averages are converging there. So it's more or less closer to that. So that's it for today, folks. Thank you for listening. For more videos like this, click here. If you like my video, please do like, share, comment, and subscribe to my channel.